I think that's a good start.
Mm-hmm.
All right. Good evening, everybody. Welcome to our second weekly session for the Solid Foundation course. In case you missed my brief intro last week, my name is Daphne Sainville. I am the Government and Economic Development Manager for the City of Fort Lauderdale. I'm going to share my screen so that way you can get our brief intro one more time. So if everybody can see my screen, um, this is the second session, May 3rd, Sourcing Capital for Your Business with Edgar Collado. Let me see. Why is it not going? There we go. I want to thank my economic development team, Crystal Berman and Susie Joseph. Crystal is on with us tonight. She just waved. We have launched our microsite, which is where you can get our advantages, our business climate. You can look to see your customers, your competition, different opportunities, zoning control that the city offers. Um, our website information is below. You can also send us an email and we will link you to it. It's on our fortlauderdale.gov page. So you are welcome to peruse that at your leisure.
I'm still
A
seeing the
couple,
first slide only.
can you see this one? Are you seeing just the first slide?
That's the first slide, yeah.
All right. Can you
Good.
see this one now?
Yes.
Okay, there we go. I know what happened. Technology for you. All right, so this is our business support center. Couple housekeeping items. The next session is at 6 p.m. on May 10th, which is Monday, growing your sales skills to grow your business. In order to attend, you have to log in with the phone number or computer email address so we can record it using the same registration information. There are no makeup classes. So if you have missed the first one, but you are getting on the second one, please note that there are no makeup classes. But you are able to contact us if you have any questions about that. You have to attend all 4 sessions in order to receive your certificate. And remember to keep your name and phone number and email consistent when logging in. You are only required to register once. That same information is used for all 4 sessions. You can exit the webinar upon the end of it, or you can stay for the last Q&A session. And this meeting or webinar is being recorded, and the recording will be available to all participants up to 2 weeks. Just give us some time. We're working with some limited staff. So with that, I want to roll into introducing our speaker for today, Edgar Collado. He has actually over 20 years of experience. So this slide has to get updated in finance, general management, and sales roles in manufacturing, real estate, telecommunications, and financial services. He received an MBA from New York University Stern School of Business with a focus on strategy and operations, and he holds a bachelor's of science in finance from St. John's University. So with that, I would like to stop sharing and give you our speaker for tonight, Edgar.
Thank you. I'm really excited to be here, Daphne and Crystal. This is one of my favorite topics that we're going to talk about tonight. Hopefully, everyone will get an opportunity to learn and put some of the things that we're going to be talking about tonight into action. The first thing, though, that I'd like to do is, for those of you that maybe this is your first session, I'll tell you a little bit about SCORE. SCORE Broward specifically, who I'm a volunteer with, and is how I came to you all tonight. So SCORE Broward is a not-for-profit, part of SCORE, sponsored by SBA. The chapter's been around for 56 years. We have over 70 volunteers. And this is what we do. We help small businesses in a number of different ways and forums one of the ways is through these webinars, but they also offer face-to-face mentoring throughout the year, and obviously with COVID, doing a lot of that, if not all of it, at this point still virtually. So I encourage you all, if you like what you hear, or if you're interested in learning more, or maybe need someone to hold your hand through the process, then reach out to SCORE Broward and try to talk to someone. As far as talking to someone, like I mentioned, we offer mentoring and counseling one-on-one. Sometimes it's you and maybe more than one mentor, depending on your specific needs or your business. It's usually a 45 to 60-minute session. And it's an opportunity for you to, as a business owner, sometimes you kind of feel on an island on your own. And, you guys have taken the step at least to kind of join this session to learn more. But the SCORE mentors are there to help you as well. We've had a lot of success and great feedback on it. I'm not going to spend a lot of time on this, but if you go to our website, you'll see where you can submit for free mentoring. You enter your information for a mentor. You can actually schedule it right on the website as well. The other thing that a lot of people don't know, but if you go onto the website for SCORE Broward or for SCORE, you can search mentors as well. And maybe you find someone that has experience in your specific industry or type of business, and you can try to reach out to them directly as well. I'm going to skip the next few slides because we already talked about that. So why are we here today? I'm going to talk about 4 kind of main topics. I'm going to spend most of the time in that kind of second bullet point, which is just talking about and exploring different types of business financing that are available and that may be available to you, depending on where in the business cycle you are. We'll talk about at a high level some of the common funding requirements and specifically what some of the requirements and expectations are for each of the business financing options. And then very briefly, we'll touch on just credit scores and the impact that they might have on you obtaining credit or financing for your business as well. Here's what I hope that you'll leave here with. Again, this is a really quick session. Don't have all the time here to go through each of these in a lot of detail, but hopefully give you enough to understand the basics of what's available to you, the types of financing, and what you need to do to pursue, or at least to explore each of them as you pursue financing for your business. When you think about financing for a business, the stage of your business is really important. And we like to think about it in 3 phases and think about these as financing milestones. So if you're a startup, which means that your business has been around for less than a year, or maybe it hasn't even launched yet, there's a subset of financing options that are available to you. And we are going to talk about probably all of these, I think, as I look at the list and then over the next hour or so. And they're the types of financing and sources of financing that are most common for startups. The other phase of your business, or the other milestone, is you've started your business, you've been in your business for a year or 2. That kind of opens up the door for other financing opportunities. And we'll spend some time going through those as well. And finally, once you have what you would consider a more established business, over 3 years, you've been filing your tax returns, you have good records, that then opens up the door for even more financing. So, the point of this webinar is to help you explore and learn about all the different options that might be available to you. Because a lot of times we kind of automatically default and think, oh, I need a financing, let me go to the bank and get a loan. But you know what? Most banks are not going to give a loan to someone that's been in business for less than a year, and maybe even a year or 2. Banks are really more for businesses that have been around for more than 3 years or more established. Now, that's not necessarily a rule, but in most cases, that's what we see. But the good thing is that there are other options for financing when you're smaller or newer that we're going to talk about here today. Before going into the different types of financing, I like to talk about common funding requirements. And what this is no matter who you go to for either whether a loan or equity financing, these are the types of things that you want to be prepared with. Either a document or something that you can hand off to them or that you can review with them. But even just as important is your ability to articulate and to discuss these things with whoever you're talking to regarding finance is really going to make a difference on whether you're successful in obtaining financing or not. And this goes beyond just an application, because they're all going to have some sort of form or application. This is really more about, what are some of those things about your business, about your strategy, and about you that are going to help you stand apart when it comes down to actually submitting for a grant or talking to investors about your business. The first one of these is what we call general information requirements. So this is your typical or traditional business plan, or it might be called a financing plan. So before you approach anyone for any sort of financing, whether it's a loan, a grant, or equity, you want to have these 6 things really well documented, and your ability to articulate and sell each of these 6 points to your potential financer is going to be significant. Obviously, what's your business? How you plan on marketing it? Do you have a competitive analysis, and have you looked at your competition, and have you been able to differentiate your business from the competition? Owner's experience. I'm going to spend a little bit here because I think this is probably one of the most important aspects when you're trying to get financing. And the reason I say this is because we talk to a lot of people at SCORE and even just personally that want to start a business, but they don't have any experience in that business that they're looking to start. And it's really difficult to get someone to give you money in a business, in an industry that you don't have experience. I'm not saying it's impossible, but it's really difficult. One of the things that we normally recommend to those that maybe want to start a business in an industry other than the one that they've been in during their career is to maybe get a job or volunteer or an internship or apprenticeship or something along those lines that at least is going to give you some experience. Or the other one is partner with someone that has that experience, right? So maybe you don't have the experience in the restaurant business. Maybe you've been in corporate America for the last 5-10 years. You know a lot about business and finance and strategy, but you've never run a restaurant. Well, try to find somebody that has that kind of experience and make them your partner, because that's just going to make the overall idea stronger and more likely to get financing. You should have a good sense of your financials if you're an existing business, or models that outline what you think your financing is going to be. And then we'll talk a little bit more about credit history later, but credit history is important for a business as it is for individual credit, especially if you're a small business, because the credit of the owner is still something that gets taken into consideration. This is, a lot of times when you look at this, it seems overwhelming. You have a lot of organizations out there that help you put together a business plan or a financing plan. One of the things that I tell some of the businesses that I mentor or that I have mentored in the past is that you should be able to articulate and put this together in a concise format. And I recommend what I call the one-page business plan. I didn't make that up, obviously. If you Google one-page business plan, you probably will find, dozens of different templates and formats that you can use. I'm showing you one in particular. But the point is that, if you're approaching someone for financing, most likely you're one out of dozens, if not hundreds of people that are asking for help. And your ability to articulate the strengths of your business and why that individual should help you either raise equity or with a loan for your business versus the hundreds of others that are approaching him or her is going to be based on your ability to really articulate your business and the advantages of your business versus one of those other ones. So as we think about competition in a business, and you have your competitors down the street, right? Competition starts here as well when you're trying to raise money for your business. and you need to be able to convince those individuals that are going to potentially be financing your business why to finance yours versus another business. And I really like having the one-page business plan because it's literally something that if you just have a minute to present to someone, or maybe you don't have the time to present it, you give them this one-page business plan instead of giving them a 10, 20, or 30-page business plan, and they're more likely to read it and potentially get back to you. The other aspect of kind of approaching financing and thinking about financing is to think strategically. And this is sometimes a challenge, especially for people that are looking to start a business, because when you're starting a business, you are thinking very tactically, right? What that means is you're thinking, what is that next thing that I need to do? I need to, maybe hire employees. I need to sign a lease for my business. I need to buy equipment, whatever it is, you're thinking very tactically. And that's really important. You need to be able to do that, obviously, to get your business off the ground and to grow it. However, thinking strategically is a skill that's really hard to develop, but it's something that we can all do. And this is going to come across when you're talking to financiers, much more than tactical thinking and planning. So this is more about, what are some of the big ways that you can achieve your goal? What are some of the high level, big actions and resources that you need to achieve them? And then more important, what are some of those decisions that need to be made along the way for you to be able to actually achieve whatever that goal is? And I like to think about thinking and acting strategically in these five ways. And I know this is a busy chart. I know you all get copies of this and you can read this on your own. But the use of data is important, right? And what I mean about this is I can put together a business plan that says that I'm going to grow a business that started at zero and is going to be selling $1 million in 3 years. And I can put that together by making all sorts of assumptions, some that may be backed, others that don't. If you're doing something like that and you're putting together a projection for your business, you want to make sure that you're using data to support those assumptions, because any good investor or financer is going to be questioning those assumptions. So having good data, applying sound analytics, prioritizing and focusing. I read a book recently called Essentialism that essentially, no pun intended, focuses on our ability to prioritize and focus on as human beings. And one of the points that the author makes is, priority in its core, at its core, the definition of priority is what's the one thing that I need to do to get to the next level, right? What's the one thing, the one and most important thing that I need to accomplish to get to that next step? But over the years, prioritization has become a list of things, right? So, when you look at your to-do list, it's like I have 5 priorities or 10 priorities. Well, for an investor or for someone that's looking to help you raise money or give you money for your business, they really want to bring that down to what are those kind of few things that you're going to prioritize and focus on that are really going to make a difference in your business. And then also kind of thinking about execution. And the same idea here, I can put together a business plan with some great ideas, but how effective am I in actually executing on those? And thinking about different and more differentiated ways and strategies to actually enable my business to go to where it needs to go. And you're going to spend a lot more time, on some of the other sessions talking about these. But I bring it up here because I think it's really important to see how it ties into the actual financing and raising of money. And then lastly, before going into the actual types of investment or financing options that might be available to you, managing your finances and knowing your numbers is really important. I mean, I can tell you, I've talked to a lot of business owners over the years, and I asked them something as simple as, what's your profitability going to look like for this year? Or what's your EBITDA, right? What's your earnings before interest, taxes, depreciation, and amortization? Or what kind of growth rate are you expecting in the next 3 years? How much cash do you have on hand, and what does your debt and your liabilities look like? This session is not going to go through all of these. But my point is before you even approach someone to give you money for your business, you want to go out there and seek and learn about all these subjects, and you want to learn what all these terms mean. And then more importantly, you want to be able to articulate it to anyone that asks. You can say, I've grown 19% in the last 3 years. I'm expecting to grow, between 10 and 15% over the next 3 years. And this is how I'm going to accomplish it. Have an operating margin of 20%. Like, you want to be able to talk this way to these individuals, because this is what they live and breathe numbers. And in order for you to really sell them effectively, you need to be able to articulate your numbers so that they can really buy into your business idea. So I know I said a lot, and I said it really quickly because I want to get into the meat of the presentation, which is the types of investors. So I'm going to pause here just for a few seconds, Daphne, to see if there's any questions up to this point, and to just
there is a question from, I'm sorry if I say this wrong, Lucci.
Mm-hmm.
How can you protect yourself when presenting your business plan for a new business so that people do not take your business plan and implement it themselves?
Yeah, it's a really good question, and we get this question a lot. So I'm going to give you two answers, right? The first is, and I say it lightly, but I don't necessarily mean it lightly. Don't worry about it. The reason I say that is because you want people to know about your business. No one's going to want to invest or buy your product or your business if they don't know about your business. So you want to tell as many people as you want about your business. Now, the exception to that is, if it's something that's like a patent or a product that you're working on a patent on. But if it's just like a business that's going to compete in an industry where there's a lot of competitors, like, what are you afraid of? If you're going to open a restaurant, anyone can open a restaurant. Now, if it happens to be a restaurant that has a very unique way of doing business, then you want to potentially try to get a patent or some sort of copyright protection to do that. But you want to tell and communicate as much as you can about your business to as many people as possible. You don't have to give it all away, right? You don't have to give it all away, but you want to create, let's say, that one-page business plan that gives enough information about your business that's going to pique someone's interest and won't necessarily give everything away. The other thing that you can do kind of along with that is a non or a confidentiality type of agreement. And you can probably, or a non-disclosure type of agreement. So you can probably Google that, go onto LegalZoom and look for a non-disclosure agreement or a confidentiality agreement. And that's something that you might be able to offer to someone to say, hey, I want to tell you about my business, but you have to sign this NDA, non-disclosure agreement. I'll tell you from experience, if you're just coming out of the blue, they don't know you from the next person down the street, and you ask someone to sign an NDA, most likely they're going to say no, and then just move on to the next person that's even more excited to talk about their business. But if it's something that has some sort of copyright protection, then you may want to go that route first before you start marketing and selling your business. That's usually what happens. But once you're at a point where you're just, you're ready to launch, you'll be surprised. Like, yeah, it can happen, but most people don't have what it takes to start a business. So, if you have a great business idea, you want to tell people about it. No one's going to, very few people are going to try to steal your business. What you're most likely to find is people that want to help you or maybe be part of your business and contribute. But it happens. I mean, I'm not going to lie and tell you that it doesn't happen. So you have to be careful who you're talking to. But an NDA might be a good solution if it's just a general type of business idea that you're concerned about sharing.
Awesome. We had another question from Andrea McDonald. Does the personal credit of the owner of a nonprofit organization matter when applying for funding?
Yeah, I would say that for a not-for-profit, it may be a little bit different. But I would imagine that if it's like a startup type of not-for-profit, the personal credit of the owner or the founder may matter as well. Even if they give you the loan or the financing based on the financials that you put together for the company, whereas they're basing it on the organization's financial, they're going to check your credit, and they're most likely going to ask you to personally guarantee whatever loan or financing is being offered to you. So an individual's personal credit score is really important. I'll take one more question, Daphne, and then we can move on, and you can save all the other ones till the end.
Okay. The question we'll take: what is a good accounting program to manage your business that is not too complicated or expensive?
So I'll answer the second half of this question first. So SCORE actually does webinars on QuickBooks and financing or finances for your business, which are either free or less than $15. So that would be, a good place to start. If you go onto the SCORE website, like I mentioned before, and you can go to the section that says webinars, and you can go in there and you can drill down and find accounting webinars. So they offer webinars in accounting that are, like I said, either free or normally less than $15 or $20. If you wanted to take that a step further, then the most common accounting software used for small businesses is QuickBooks. It's owned by a company called Intuit, and if you went onto the Intuit or the QuickBooks website, I think they offer a lot of webinars as well, as far as kind of how to get your company set up from an accounting perspective, and it covers general finance and accounting topics. But I would start with SCORE because, like I said, it's free and very low cost. All right, so moving on to the different types of financing that is available. So private investors is very common. I'm going to go through this really quickly, but this is, a lot of people hesitate, because this really is going to your circle of influence to raise money. And, you can do this in a lot of different ways. A lot of people, automatically think is, if I'm going to go ask my brother or uncle or father or whoever for help starting my business, that means they're going to take equity in my business. But that's not true. You can do it through debt financing as well. You can get like a personal loan from a private investor, an individual, to help start your business. And my only recommendation there is that you structure it in a way that any loan would be structured, so that they feel more comfortable lending you the money. Whereas if something happens and the business doesn't take off, they have the same recourse as any other lender would to that money that they lent you. If you structure it as an actual loan, you'll be more likely to find individuals that are willing to lend to you. A couple of good things about this is that this is someone that most likely is not going to be involved in your business. They're not going to have control in your business. And usually the term of these loans are short term, and also kind of usually low dollar value. But it is an option for you to explore. And it's probably, besides, and I'll talk about these later, maybe taking money out of your credit card or something like that. This is another good source. But I'll talk about some other sources that I think are similar to, but that you may want to explore in addition to or instead of private investors. The next one is angel investors. So angel investors, this is very popular. There are thousands of angel investors in the country. These are usually affluent individuals, sometimes retired, that, they have money, they might have their retirement taken care of, and they have other assets that they're looking to invest. And the way they invest it is by looking for businesses that are looking for investors. Most of the time, angel investors are going to take an equity position, although not always. And angel investors generally invest very small amounts, and we'll cover that in a few minutes. And they're investing their own money. So this is, let's see, Edgar Collado, in 10 years, hopefully, knock on wood, if I can find some, I'll be retired. I want to retire young. Maybe I have enough money that I want to start doing some angel investing. And I like, restaurant businesses, or I like manufacturing businesses, or maybe my experience in finance, attracts me to finance, and I want to invest in startups that are trying to grow into that industry. So most of the times, what angel investors do, they don't do it as individuals. they join organizations of other angel investors, because what that helps them do is diversify their risk. But angel investors are taking a high risk. They expect a high return. They're usually looking for businesses that are going to return more than 20% of the investment. Many of these angel investors want to know that there's a clear exit strategy. And what that means is that there's a way for them to get their money back. If it's a loan, it's going to be through some sort of payback of the loan. If it's equity, then it's either going to be a sale of a business, if the business is going to go public, or potentially you get other investors that kind of allow you to refinance your smaller investors. But angel investors give an opportunity for someone to get a loan. It could be as small as $5,000 to $2 million or more. But the angel investors, let's say the individuals, if I wanted to invest in a business, I may only invest $1,000 or $2,000. But you'll have an angel group that might have 100 investors, each investing $2,000 or $5,000, and they might have $500,000 to invest in businesses, and that's generally the way they do it. They don't take a lot of or control over the business, but they're a great resource for businesses because they help connect you, and that's really where one of the big benefits of angel investors come. A lot of the angel investors tend to invest in similar industries. So, I keep using restaurants just because it's an easy example, but let's say there's an angel investors in restaurants, they might have already connections with vendors and suppliers that they can put you in touch with, which will help you be more successful. Obviously, your success is going to lead to their success. So they have a vested interest in you doing well if they're investing in with your business in this capacity. If you search in Google for angel investor, you'll probably find, like I said, thousands of them. There's some that are industry focused. There's some that are geographically focused. I'm going to provide you all with some examples that you can look up on your own. There's Miami Angels. And generally the way these work is that you go on their website, they'll tell you, first of all, if they're accepting applications for companies. And then they have pitch nights or pitch events, usually for like a certain period of time, where they take all the pitches and then they invite some of the businesses to come back for later rounds until ultimately making up their decision. But there's Miami Angels, there's South Florida Angels, there's the Knight Foundation, there's People Fund, and these are just an example of some of them. Some of the ones that have more angels, I guess, and are doing more investments are listed here. And you'll see highlighted or bolded that they all have industries that they specialize in. So Tech Coast Angels is looking for tech, biotech, consumer products, internet or information technology. Gold Coast Angel Investors, they like they're industry neutral, so they're willing to invest in any industry. Golden Seeds is looking for businesses that are either founded or led by women, and then there's a couple of sectors that they like to invest in. So really, what you need to do is find out, what are those angel groups, if they exist out there, that are focused on your business. There may be some angel groups that are for minority founders, Latino founders or African American founders. It's just a matter of doing the research and identifying them, and then trying to determine exactly what their application process is. A step up from angel investors is venture capital funding. Here, you're definitely going up in the realm of financing expertise and sophistication. Venture capitalists still invest in generally smaller or less mature businesses. But they are also investing in businesses that have some sort of a track record or have built some sort of credibility in the industry. So what I mean by that is they might invest in, you guys hear it all the time, these .com, internet or technology startups or applications. They're not making money, but they have 10 million, 30 million, 100 million users on their platform that could be monetized at some point. Venture capitalists kind of salivate on that. But venture capitalists aren't only out there for these high tech type of companies. They're out there for every conceivable business that you can think about. You know, there's venture capitalists out there that are buying dentists and dental practices. There's there are venture capitalists out there that are buying restaurants and consolidating. There's venture capitalists out there that are buying dry cleaners. You name it. So what you want to do is you want to try to find venture capitalists that are either buying or investing in your industry or your type of business. They tend to take a lot more control in your business. Many times they will want, if there's a board of directors, they'll want to take a position on that board. They're going to be very financially focused, extremely financially focused. They're going to want to see a history of growth in sales and EBITDA, which is earnings of your business. And ultimately, they want businesses that they're able to grow and scale dramatically. And they're looking for a very big exit. They're usually investing more than $1 million, and they're looking for a clear exit strategy, because ultimately the venture capitalists are funded by general partners, many times individuals or other companies that are investing in the venture capitalists, and they have a return that they need to give back to those investors as well. So I think understanding the world of venture capitalists is important, because this is where they get their motivation. This is why they take such a big presence in the companies that they invest in, because they have very specific metrics and deliverables that they need to achieve for their investors as well. There are, again, literally thousands of venture capitalists in the country and around the world. This is a guide that you might be able to find it online. Most public libraries have it. It's very expensive, so you can't just buy it. It's one of these things that's like a $12,000 or whatever the number is if you were to buy the book. But the truth is, these days you can find a lot of this online. But this guide puts together a list of all the venture capitalists and kind of categorizes them into different categories so that you can identify them. What we did for you is put together a list of venture capital investors in the state of Florida. And this isn't like an all-inclusive list. And in fact, some of these venture capitalists don't last for whatever reason. Either they made bad investments, or they the funds closed and they moved on to something else. But here are some of the venture capital investors that at least when we put this together, we were aware of in the state of Florida, which you can reach out to. And again, you're going to get these slides, so you can kind of look these up on your own later on. But you might have heard of some of these. The Miami Innovation Fund is really popular. You see it in the news a lot, because there's a big talk about Miami and South Florida and Fort Lauderdale potentially becoming another tech capital in the near future. But there's a number of ones here in Fort Lauderdale as well. The La Sola Venture Capital. There's Athenian Venture Partners, and some other ones that you can kind of reach out to and at least learn a little bit more about what it is that they're looking for. I'm going to pause for a few seconds here, Daphne, again, just for any other questions that we may have.
Yes, we have 4 questions, or actually 3. So the first one from Velvet Jordan: can you share a copy of a financial model for an entertainment company?
So entertainment company is very broad, but what I recommend that you do, depending on what you mean, you could be do you want to do concerts, or do you want to do live, or other live music events? Do you want to do promoting nightclubs? Do you want to do production of music? So there's a lot of different types of businesses within entertainment as a whole. But what I suggest that you do, and it's a lot easier to find now than it was way back when I started in finance. If you Google common financial ratios, or common standard financial ratios, and then whatever that industry is that you're looking for, you'll likely to find what's called, usually there's common financial statements or common financial ratios. And what that does is it'll tell you, okay, if your revenue is 100%, then how much should you be spending on salaries? How much should you be spending on marketing? How much should you be spending on insurance, et cetera? So it basically gives you a financial statement in ratios, right? With your revenue being 100%, and then all, let's say the expenses being percentages of that revenue. Hopefully that helps.
Okay, and then from Arturo, if I have a good idea for a new product, do I need to patent and have a prototype of it in order to get a loan?
So it's going to be really difficult for you to get a loan unless you actually have a business. So a good product is not a business, right? And definitely a prototype is not a business. So I mean, you see this all the time. If you guys watch Shark Tank, you can look it up if you don't, where you have a lot of people that come with a product and they're looking for investors to help them develop and grow that product. It's going to be really difficult getting a loan because you don't yet have you don't yet have an established business that's generating cash. At the end of the day, any investor, whether it's a lender or an equity investor, is going to be looking for cash. And if you don't yet have a business, you're not yet going to have cash flow out of that new product or idea. What you can do, and you have to be very careful because there's a lot of scam artists in this space where they tell you, oh yeah, we'll help you bring your product to market, but you got to pay us, whatever, a couple $1,000s. And there's a lot of people out there that get ripped off. Is identify companies that might already be making or selling the product that you're thinking of, and figure out a way to network and approach them about your product. So some of these product companies, most of the time they will buy the idea or the patent from others and market it. The other thing you can do as well is, let's say you have the product, you have the patent, but you don't know how to start a business, or maybe you don't want to start a business. Maybe you just want to be the idea person. There's a ton of companies out there, particularly in China and in Asia, who will make the product, market it, sell it for you. But again, you have to be very careful in this space because there really are a lot of scam artists. I actually have a friend of mine who does a lot of product development, and he is either writing a book or wrote a book recently that's aimed to help people not get ripped off. I'm going to make a note to myself to see if I can find out if that book is already out there, and I'll send it to Daphne to share it with those of you that might be thinking more about going the product route.
Awesome.
Question,
the next question is, the ROI you said is about 20%. Do you think that that's a fair ROI? If so, why?
Okay. So the ROI, there's not one ROI that's fair across all industries. So and the reason I say that, when you, as an investor, if I'm putting money into a company, I will have an expected return. An ROI is another term that might be used for that. I'm going to have an expected return from my investment. And that expected return is going to be based on two main things. So one is, how much risk am I taking in that business? And two is, what else can I do with that money? So, if I have $1 million to invest today and I put it into the stock market, maybe in the long term, I can get 5 to 6%, right? On average, maybe 10%. The last 10 years have been great. So as an investor, if I'm going to take that $1 million and put it into, let's say, a business that's more risky than the stock market, I'm going to expect a return greater than what I get from the stock market. That's how all these investors are. It's the way banks do it, right? So a bank takes deposits from you and I. They give us almost nothing, right? 0.01% on our deposits. and then they lend it for 3 or 4% or 10, 20%, whatever the number is. So 20% is a little high on average, but it's not unreasonable. And in fact, some private equity or venture capital type of investors look for ROI of 50% or 60%. It depends how risky it is. And what determines risk is some of the factors that I mentioned before. It's like, the experience of the owners. It's also how strong your business is. If you've been in business, I'll give you an example. My business, we've been in business for 40 years, 40. We got a loan to buy the company out from a founder about 5 years ago. We were able to get an SBA loan, at a reasonable rate, right? Whatever, 5, 6, 7%, whatever the rate is. And the reason we were able to get a loan at that rate is because we have a lot of credibility. We're known in the industry. There's not a lot of risk in investing in my company because we've been around for a long time. If an investor is investing in a company that doesn't have a track record, they're going to need to see a significant return in order to make that investment. All right, and moving on, I'd like to talk about some what we call evolving sources of funding. So these are, they're evolving. They've been around for a while. They're not brand new, but there's still things that a lot of people don't know are out there and that exist as a potential for raising money for your business. The first one I'm going to talk about is peer-to-peer loans. And peer-to-peer loans is exactly what it sounds like. It's basically, Edgar Collado, again, I have $1,000. I put it into a medium or a network that's then going to lend it to someone that needs it for whatever reason. Usually it's an online platform that acts as the middle person. But as a borrower, you go on there, you say, hey, I need $30,000 to buy this equipment, to do this, to do that. Some people do this for personal loans, some people do it for business loans. Then your application is reviewed. Usually the interest rates are higher than banks, but it's because, again, they're taking a little bit of a bigger risk because they're lending to people that have, less established businesses. The amounts are generally small. The loans are usually short term, but it may be another option for you to do this. And, I'll give some examples here of some of the more popular ones or common ones. Funding Circle, Prosper, Circle Back Lending, the Lending Club. I'll talk a little bit about Prosper because I actually have known about Prosper probably for about 10 years when they first started. And I put like $1,000 in. And the way it works is I can tell Prosper, hey, I put $1,000 in there and I don't want to lend more than $50 to any single individual or business. So, as a business owner or as an individual, you go to Prosper, you say, hey, I want to borrow $30,000. And when that gets approved, what Prosper does is they spread that $30,000 across hundreds or more lenders. So they'll take $50 from me, $50 from the next person. Maybe someone else has a $200 limit. Maybe someone else has a $1,000 limit. And they put together a lending team that's going to now lend to the business. As the business pays that loan back to Prosper, Prosper collects their fee, and then they pay it back to the lender, along with interest. But it's a really good source of financing as well if you're having a hard time getting financing from somewhere else. But it's going to be largely based on your credit. So if you don't have good credit or don't have a partner with good credit, it's going to be very difficult to get this type of financing. The same goes with online loans. Now, a lot of people are still afraid of, doing business online. We tend to go to the brick and mortar banks. I would recommend, you can work with a bank, you can look at credit unions. There's a lot of these online lenders as well that are here specifically to help businesses that maybe don't qualify for traditional loans. And I'll talk to you about why it's hard to qualify for traditional loans in a few minutes. But a lot of these companies are, you're going to recognize probably some of the names when I put the next slide on. These companies are out there. A lot of them have very kind of deep-rooted missions to help small businesses and help businesses expand and grow. The qualifications are going to be different. Again, it's going to depend on your credit score and a lot of different aspects of your business. Generally, the interest rates are going to be high or higher than banks anyway. But the truth is that interest rates are really low right now. So now it's actually a really good time for you to be considering financing for your business. Because I mean, we don't know where interest rates are going to go. Right? You hear about the interest rates, or maybe some of you lived through the interest rates in the 80s, right? That were 15, 16%. When we could go back to a time like that, I mean, we don't see it in the foreseeable future, but it's possible. So now's a really good time to look for financing, specifically borrowing with interest rates so low. Here's some of the online lenders that you can explore. Kabbage is a really popular one. SoFi, actually, I'm a customer of SoFi because I use them to refinance my student loans from NYU. That's how they started. They actually started off by just refinancing student loans, and they've since expanded to like credit cards. I think they do mortgages. They definitely do personal loans and business loans. And you know what's nice about some of these companies, even though sometimes the interest rates are higher, they generally have lower fees. It's a little less complicated, less difficult to get a loan. And they, again, they're usually easier to deal with than your traditional bank or credit union. OnDeck is another big one that focuses on small businesses, and then Lendio is another one. The other one that I keep forgetting to add here is QuickBooks. I mentioned QuickBooks before, but if you're a QuickBooks customer and you've been using QuickBooks for a couple of years, they also have financing available for small businesses. It's usually not a lot. It's like $30,000, $40,000, but they do offer financing as well. And that, in my mind, kind of goes on here with the online lenders as well. And then we have crowdfunding. So crowdfunding, this is an interesting one. I mean, I know of, personally know of one business that got, actually was able to generate money here. A lot of you probably know crowdfunding because it's used a lot for charity or philanthropic type of fundraising, kind of like GoFundMe, right? So, maybe someone has fallen under hard times or had a death in the family and needs help, with funeral expenses or what have you, they do a GoFundMe. Well, you can also use these platforms for businesses. And a lot of times, you don't have to, there's no payback. Sometimes you might have a great business, a great idea, and it's so exciting and people just want to be part of it. Believe it or not, people will do it, right? I mean, especially in today's world with like TikTok, you see it all the time when someone says, hey, here's I met this homeless person the other day. They're really, smart. They, they just kind of fallen under hard times. Can you guys help? And all of a sudden, everyone's giving them $20, and before you know it, that they've raised, thousands of dollars for a homeless person. People are generous, right? And they are looking to help out. And it's the same thing with businesses, maybe less so than the charitable thing, but you have a population of people out there that are really interested in helping small businesses thrive. So some of them are really just looking for recognition and to say, hey, I had a part in this business getting founded or started. Others kind of give small givebacks, right? T-shirts or trinkets. And another popular one is products when it's finally made. The one that I mentioned to you guys before was these two guys that went to business school with me. They started a company that was making air conditioning vents that, like the vents that you open and close. You might, I don't know if you can see mine in my office here, but well, they were making one that had like, you can open and close it with like your phone. And they raised a ton of money through GoFundMe, or maybe it was Kickstarter. And then eventually that helped them get the prototypes put together. It helped them go out and get other investors. And that it served as a stepping stone for them. I think they use Kickstarter. That's the one that's most popular for businesses. But here are some of the the examples. But depending on what you're looking to do, for that person that asked about entertainment, if it's a show or something that you're trying to launch, you might be able to give people access to tickets or discounted access to tickets, right? If it's a startup, you might that's product driven, you might give them access to a product or a discount on the product, or maybe even if your product costs you can pre-sell your product in a way, right? If you're gonna how much money you need to make your product, you can do a Kickstarter and have someone contribute $100, and that can be what you use to pay for the manufacturing of your product. So there's a lot of different ways to think about this, and there's a lot of different options for you if you go the crowdfunding source. This is just a couple of different examples of some of the ones that we have seen before. This person's making a tonic, right? They're making a drink. And again, the cool thing about this is if you're really good at articulating and selling your idea, people will be willing to contribute to you and be your first customers. Now, all these platforms have very strict guidelines. I know people that have put legitimate business ideas there and they've been booted off with no explanation. That's unfortunate, but it is another option for you to explore. And then I'll talk about grants. And I know I'm going through a lot here. I apologize. I'll take some questions in another couple of minutes. A lot of people like grants. Who doesn't like grants, right? Grants are free money. But I'll tell you what, they are the most difficult to obtain ever. So if you have another source, go after it, because grants are very difficult to get. They're not impossible. I'll give you an example. I think it was FedEx had a grant program. It might still have it. They partner with SCORE to get the word out. And with this website called Alice, I don't know if you've heard of Alex, or Alice, ALICE. And I went on there I was curious just to see, like, I have a couple of businesses that I know, people that I know that are starting businesses, and I'm like, let me go check them out. Maybe I'll tell them about it so they can submit, for a grant from FedEx. It was like $5,000, 20, something there. And I went onto the FedEx grant program website and I looked at Florida only, state of Florida. There were hundreds of applications in the state of Florida only. So it's kind of sad, but most of those people weren't going to get the grants, and they probably went through a lot to put the application in. So grants are great, but they're really difficult to get. Sometimes they take months, and many of them are mostly for not-for-profits. So although there are a lot of grants out there for businesses as well, or for-profit businesses. But I would look for like organizations like SCORE. I would look for big corporations. They sometimes do offer grants for businesses. Universities too. I remember, again, NYU, when I was there, they had like business case competitions and different grants. Usually you need someone to be affiliated with the university somehow, like an alumni or a student, but those options are out there for you as well. Here's just some references. Again, if you wanted to go the route of a grant, here are some references that you can pull up. If they can't help you, some of these, they might be able to point you in the right direction. And again, you'll get these slides so you can look these up at your convenience later on. I'll pause here, Daphne, for another question or two. I know we have about 15 minutes to go, so I think we're doing okay on time, and I'm happy to take a couple of questions.
All right, I've got 7 so far. So do you think you'll be able to take all 7?
Give me 2 now so I can wrap up the presentation, and then I'll take the rest at the end.
Okay, so the first question from Jose is, what's the best business to start in today's environment?
If I knew, I'd be a gazillionaire. I don't, it's an interesting question. One of the things that I tell business owners that are looking for, let's say, business ideas, like they know they want to start a business, but they don't know what kind of business, is to put together, a list of criteria of different aspects of a business. Because remember what I said really early on. It doesn't make sense for you to start a restaurant if you don't have any restaurant experience. I'm not saying it's not doable. It can be done. Of course it can be done. Thousands of people more do it. But it's not the best business for you to start if you don't have any business experience. So when you think about, what is the best business to start, what you really want to think about is, what is the market? What is the size of the market? And what is the opportunity in the market? And I can't, I could do a whole webinar on this, so I'm not going to spend a lot of time. How much experience or credibility would you have in that business? What value add would you bring to that business? Is it something that you can really make a difference in and you can really differentiate yourself in? And then finally, is it a business that you really want, right? So, I joke around, I like cars and motorcycles and things like that. And I joke around, it's like, oh, I'd love to own a motorcycle dealership. And every time I kind of take a couple of steps into that direction, I'm like, do I really want to own a motorcycle dealership? It's like, it's a great hobby for me, but it probably would be a really horrible like business. I don't know that I'd want to run that kind of business. So these are some of the questions for you to ask yourself, to give you something to go back with and kind of not have you feel that I didn't answer your question. I think anything in healthcare right now is tremendous opportunity. So I think if you have some experience in healthcare and you can look for opportunities in healthcare, I've been seeing a lot of the private money go into healthcare businesses, whether that's like pediatric practices or dental practices. So anything in medicine or healthcare, I think will be tremendous. And I still think your more traditional kind of service type of business, like restaurants and bars and all that, are good businesses. But you got to be careful with the market that you're going in. And to be honest with you, like the South Florida market there's a lot of restaurants and all those bars and a lot of service businesses down here. And I've seen a lot of people have success by moving into different states or cities. Obviously, that's not what we want because we're in Fort Lauderdale. We're talking about Fort Lauderdale businesses here, but those are some, just some ideas for you.
All right. Our next question from Andrea is, are there any funding opportunities for nonprofit organizations?
Yeah, so there are. When I talked about grants, usually grants are the best opportunity for nonprofits. The problem with the grants, like I said before, is that there's a lot of nonprofits pursuing them. And a lot of the nonprofits that are pursuing them are really big nonprofits. I mean, you think about American Heart Association, American Cancer Association, even though they have like this huge stream of cash because they do a lot and they already have relationships, they're still out there pursuing some of the same grants that you might be pursuing as let's say, if it's a startup type of not-for-profit. But looking through some of the resources that will be shared here on grants, I think is a good place to start. The other place to look is, and it depends if it's a startup not-for-profit, it's going to be really difficult. I'll be honest with you, most not-for-profits are bootstrapped. That means they're started by your own money or maybe money that you're getting from friends. But if you're a not-for-profit that's been around for a while and you have a really strong mission and a strong following, then there's a lot of community foundations out there that often support not-for-profits. Again, they're competitive. I'm not going to lie, it's not easy, but it doesn't hurt to reach out to find out what their what type of organizations they're trying to finance, and maybe you can get lucky with at least getting an introduction and learning more about it. Community Foundation of Broward is a great organization, but they have limited assets, and sometimes they have very specific goals as far as like where they need to direct the money that they have. But so it's a matter of not only checking once, but continuously following up. So moving on, I'm not going to spend a lot of time on banks and traditional financing, even though this is the one that most people probably want to get, but it's because the requirements here are pretty straightforward. They hardly ever lend to anyone that's been in business for less than 2 years. Usually want to see a business plan or at least a financing plan. Your own credit is going to be really important. Most banks will not lend to you unless you have some sort of collateral. And what that means is an asset that they can come after in the event that you don't pay back the loan. So whether that's a personal house or assets in your business, like equipment or vehicles, they're going to want collateral. Most banks will not lend to service businesses, especially most of your commercial banks, because service businesses don't have any assets unless there's some personal guarantee, which most banks are going to request. Obviously, as a lender, they don't have any ownership equity. They're simply lending you money. There are some banks out there that provide startup loans. The best way to learn of these banks is to work with organizations, like SCORE like, all the economic development organizations, like the one in Fort Lauderdale, generally they're the ones that have relationship with the banks that are interested in startup loans, but there aren't that many out there. Most are looking for longer term loans, which they want to give to more established types of businesses. And you can get a loan for many reasons. You might need a loan for working capital, and working capital means is to hold you up. You have sales, you have money coming into your business, and then you have to pay your vendors and your employees. There's usually a lag in between when you collect your revenue, if you're selling on credit, and then when you have to pay your vendors. Unfortunately for startups, usually it takes long to collect from your customers unless you have retail, but your vendors aren't giving you time to pay. You have to pay right away. So the working capital loan kind of helps you, gives you a cushion there to help with that period. Obviously, if you're expanding your business, there's loans that are for that. If you're refinancing, so I mentioned earlier, like you might be able to get a family member to lend you money. Maybe 2 or 3 or 4 years down the line, your business is now more mature. You can go to a bank, get a loan, and then pay off your cousin or your father, or whoever lend you the money, and get that off your books, and then just have a more traditional bank loan. And obviously, if you're in the acquisition mode, there's also financing available for that. Generally, these loans are paid every month. They have different terms. Most bank loans are 5 to 7 years long. Some are short, some are long. They all have different types of requirements. So I'm not going to go through all these. You don't have to get a loan. If you don't want to get a loan, you can get a line of credit. A business line of credit works very similarly to a personal line of credit, which means that they approve you for a certain amount, but you only take it out if you need it. This is another option. If some people are afraid of the debt, right? They're like, I don't want to go get a loan and then be in debt for $50,000. You may not need to, right? If all you want is like that cushion, like if you want something to protect you against a pandemic, for example, then a line of credit may be perfect. It's like, look, I don't need the money because my business generates enough money, but just in case there's like another pandemic or an economic crisis, I want something to support me through that period. That's what a line of credit is for. The problem is that you want to have the line of credit before you need it. Because if you try to get a line of credit during a pandemic, it's going to be really difficult, as we all saw. The other good thing about traditional loans is that you could potentially qualify for an SBA bank or backed loans. They're not easy to get. They're difficult, just like traditional banks are, but they're a little easier to get because ultimately what happens is that the SBA is guaranteeing the loan will be paid. So if you get a loan, an SBA backed loan, you're still going to get it with a bank, maybe Bank of America or whoever, but you're going to have to, if you default on the loan, then the bank can go to the SBA and collect on it. And you can look up online, you can go to the SBA.gov, you can learn more about that. You can talk to a SCORE mentor, and they're happy to tell you more about how the SBA backed loans work. And then I want to talk about a couple of really quick alternative financing methods. I touched on these a little bit. You're probably really familiar with these, but just planting some seeds and some things for you to consider. If you have a business that has a lot of equipment or vehicles, you might be able to borrow against that. If you have a business that has real estate, you might be able to borrow against that. You might be able to get a credit card for your business or an open account. I know a few people that have supermarkets, and most of the time supermarkets run on what's called open accounts or trade accounts. That means that usually the distributors will give credit to the supermarkets for all the inventory that's in the supermarket. And then of course you can always go out and get personal loans and lines of credit, but just be very careful, if you're using a credit card for that. There's also a couple of community-based micro lenders that I wanted to talk about. They're usually less strict than banks. They will work with people that have less credit. They don't always ask for a business plan, although they definitely want something that describes the business. And you can get very small loans. Let's say you just need something to help you do some marketing. You might be able to go to a micro lender to get some, have them invest in your business. and maybe help you deliver on that marketing program that's then going to help you lift and grow your business. Here's some examples. You have Accion in Miami, Business Loan Fund of the Palm Beaches. You have the Sable Veterans Assistance Foundation, Partners of Self-Employment in Miami, Our Micro Lending, you have the Lift Fund, Tilt Forward. These are all a couple of organizations that are out there that do what's called a micro loan. I'll give you an example of Accion. They really they're national, so they work anywhere, but they have like a loan for established businesses. They have a transition loan for someone that might be changing from one location to another. They have an emerging business loan, and they have a Sprout loan. So this is for startups. So if you're like a startup and you've only been in business for a few months, or let's say you work, this is really what this is. This is like if you work part-time, even full-time, and you're looking for some money to start a business, this is a good program to look into. It's with Accion, and it's called the Sprout loan. Some other community-based funding, you have CBDG Business Loan for Lauderdale, Revolving Loan Fund, Neighborhood Lending Partners. And I know I'm going through these really quickly. I apologize. The intention here is not to spend a lot of time on these. It's just to tell you that they're out there. And hopefully when you get this presentation from Daphne and team, you'll be able to look into these a little bit further. But these are all good sources, and they're looking to lend in our communities. You have Prospera, which is focused on Hispanic-owned businesses. You have the Black Business Initiative Fund, which is focused on Black-owned businesses. So these are all there's so many different options out there it's exhausting. It really is. But if you believe in your business, you just got to keep trying, right? You don't give up. You keep asking, and you ask everybody. I'm not going to spend a lot of time on this because I touched on this, but your credit is going to be really important. Here's some of the things that impact your credit the most. So if you have a bad credit history, that's the biggest problem. If you use too much of your credit, let's say you have $10,000 in credit and your balance is always at $8,000 or $9,000, that's not good. If you don't have a long credit history, if you have a lot of new accounts, or if you only have credit cards, these are things that are not good for credit. So you want to try to get different types of credit, like a student loan, a car loan, and kind of maximize that. I touched on this here a little bit, some of the things that to stimulate your credit and to help improve your credit if your credit is a problem. And then some final thoughts and then questions. I know we have like 2 minutes to go, and I really don't want to keep you guys over time. But as long as Daphne is okay, I can stay a few minutes later to answer any questions. But if you have a credit problem and you want to start a business, remember I mentioned priorities? Instead of having 5 or 10 priorities, your number one priority needs to be to fix your credit, okay? That's the first thing you need to do. Once your credit is good, then you start thinking about your business plan. Make it concise. Make it something that's easy for anybody to read and understand. Consider doing that one-page business plan. If you need to go deeper, that's fine, but have that be the backup. That one-page business plan should be what sells your business to an investor. Make sure that your assumptions and your projections are achievable and that they're realistic. If you're opening a business and you've never run a business before, and you put, okay, I'm going to grow a business and the next year it's going to be $3 million in revenue, it's going to be really hard for anyone to believe that unless it's really compelling, okay? So just be realistic. There's people out there that lend to all types of business. So just because your business is not going to be $1 million business doesn't mean that it's not a good business. Be realistic, be honest. And because otherwise people will read right through it, and then you're never going to get any success in this because your assumptions are not good. Address the questions as if you were the investor. So this works in whether you're going for a job interview or whatever it is. Think about what questions an investor might ask you and have answers prepared for that. Prepare. No matter who you're talking to, you want to be able to talk about your business in an eloquent way, be able to sell the idea. You want to excite people about your business. You want to be able to talk about the numbers in an educated way, and you want to be able to be smart about the different options that are available to you. So obviously I talked about contacting SCORE. Hopefully you all learned a little bit about financing for your business. I'll leave this slide up here with some more information about me while I take any questions, Daphne, if it's okay for me to take questions. If not, just let me know. Thank you.
Yeah, absolutely. Thank you. All right, we've got a lot of questions.
Okay.
Here we go. So I'll start from the top and then go from the least recent to most recent. So first one, Emily, can you get a venture capital investor for a health club?
So the short answer is yes, but probably not for one. So remember, the venture capitalists are looking for usually bigger businesses. So let's say you open up a health club, and maybe open up another one, and then maybe open up a third. And once you start building some mass, there might be some venture capitalists out there that are investing in health clubs. I don't know for sure. I mean, there's a lot of competition in health clubs, the 24-hour fitness and this one and that one. So it's very competitive, but it's not unlikely. It's not impossible. I would do some research on that, but I don't know the answer for sure. But it's possible. Although, like I said, I doubt that a venture capitalist would invest in a single health club. But if you're starting to develop a chain and starting to grow it in that way, you might get some investors.
All right, thank you. So the next one is from Chrissy Bill. Currently sending my pitch to alternative funding groups. How long should you wait for a response before pitching to other organizations? Also, are networking groups like the Tower Club a good place to meet private investors for an established business?
So I would say a couple of parts of this question. So as far as the timing and how long you should wait, it depends on the group that you're applying to. I mean, hopefully they've been able to give you some feedback on, it's going to be a week or two. But to be honest with you, I would not stop pitching your idea. Unless there's an exclusivity type of arrangement, I would start pitching today, especially if it's been a week and you haven't heard back from them. Because remember, they're reviewing, they have their own internal processes. As long as you don't commit to anyone else, it doesn't prevent you from pitching. Again, it depends on the group. Maybe they have some sort of exclusive right to the business, but just because you're pitching it to someone else doesn't mean that that you're going to go with them. So I would not lose momentum, especially if you've gotten as far as being able to pitch it to some alternative funding groups. You want to kind of keep that rolling. As far as networking groups, yeah, networking groups are always great. Networking groups are hit or miss. You may get lucky, you may find someone there. The only thing I would say from a networking perspective is just be as specific as you can when you're networking, right? Your networking professionals out there will say, you should know exactly who you want to talk to and what you want to tell them, before you even meet them or run into them. I think the kind of the greet and mingling type of networking is really hard. So what you probably want to do more so than just broad networking is try to find out specific individuals that invest in your type of business or that are investors. A good place to meet those investors might be like these angel groups that I talked about before. They also do networking events. But just even on LinkedIn, looking for people that are in that industry where you want to go to and that you see that have been successful, and then find out where they're going to network and where they're going. Instead of going to like a Tower Club, hoping to meet that individual, try to find out where those people actually go and then go there.
Excellent. Okay, from Martine. Good afternoon. I'm a hairstylist. I'm interested in opening a beauty school with a focus on health, wellness, and nutritional education. What's the best way to approach planning this endeavor?
So I can't go into this in a lot of detail here, Martine. I apologize. I think doing some research on beauty schools in general. I mean, the web is amazing. I got to tell you, I used to work for a not-for-profit where I used to help small businesses like start businesses, kind of like SCORE, 20 years ago. And man, I could never find any information. It was so hard. Literally going to the library and looking through books and books and books. I would try to find, the beauty schools out there and seeing what's available. Maybe there's a franchise available that you can buy into, and that would kind of give you a step up. You don't have to start it from scratch. And then in that franchise, if they give you the flexibility, you might be able to incorporate some of your thoughts and your ideas like around the wellness and the nutritional education that you're trying to fit in there. I like where you're going though with the beauty school, right? Being not just the beauty, but everything else that goes along with it. So it's a really good idea. Great question for a SCORE mentor. If you don't have one already, you might want to consider talking to one.
Awesome. Next one is from Mary. I'm going to rearrange the question. She wants to know if part-time businesses or home-based businesses are able to get funding, because she wanted to know if this webinar was for businesses operating full-time, but it's for all businesses, entrepreneurs.
Yeah, it's for all businesses. The only thing I would say really is that, some businesses, right, again, I mentioned some investors focus on specific industries, so that not everyone's going to want to invest in let's say a home-based type of business, but there's plenty of programs out there for home-based businesses, like the Sprout one that I mentioned, for example. Obviously, you can always get financing from relatives. Some financing programs might want a physical place of business. It really depends, but I think a lot of these, like a lot of the online lenders that I mentioned, I mean, I'm not aware of it. I don't think they have the restrictions on that. So if you went to like a SoFi or Cabbage and applied for a loan for your business, I don't know that they would care if it was a home-based business or not.
Okay, so from Vincente, sorry. Consulting professional services organization does not necessarily have a lot of assets.
Yeah.
It's more about knowledge, but we need cash to grow and achieve some marketing and exposure goals. Any suggestions in terms of getting financing?
Yeah, Vicente, I completely understand you because I'm in the same kind of business. So I think your best bet might be to explore an SBA loan. SBA loans are much more favorable or more open to services or service type businesses, and then they partner with the banks. So I would say, SBA is probably a good route for you to pursue if you haven't already. The other option is to bring on partners, right? Usually with service businesses, you have partners. If you can bring on a partner that maybe has capital, you've already built a business, so your business is already worth more than what it was when you started it. You can bring out a partner with capital, give him or her some equity, but then use that capital to grow. Those are the two quick things that I can tell you. Actually, the last thing is look for a lender that specializes or has a niche in whatever industry you're in. So I'm in financial services, registered investment advisors. Our loan was with a company called Live Oak Bank, and they do a lot of lending to my industry. So, those will be more likely to lend to you.
Still on mute. All right. Rod is asking, are there any federal, state, or county grant programs for small businesses that had to close due to COVID? Because small businesses will need assistance to get back on their feet.
Yeah, this is actually a whole webinar in itself, Rod. I would, so the answer is yes. They keep popping up and they change, right? Like the PPP program, right, is the one that's most popular or most common loan, because that's a loan that then gets forgiven. But there's another program called Main Street Lending. That one's actually a lending program, but it's also supported by the Department of Treasury to help businesses that have been struggling through COVID. And then there's new programs that are coming up every day. I know that with the latest law that was passed, there was the Restaurant Revitalization Act or Fund. So if you're in a restaurant business, there's going to be a program coming up that's only for restaurants. But I would highly recommend you contact SCORE, or maybe the economic development team in Fort Lauderdale might know. Contact like the City Hall, wherever you live. If you live in Plantation, I know at some point Plantation, and actually I have a friend who works for the city of Hialeah. Like all the municipalities got money from the federal government that they were passing back to local businesses. So I would, whatever town or city, if you're not in Fort Lauderdale, your business is or you live in, I would contact there as well and to see if they have any programs or grants, because the money's out there. It's just you got to hit the pavement and look around and ask.
All right. One person, Lamar. I design and build furniture. Do you have advice on how to find domestic manufacturers, i.e. metal, plastic, etc.?
I don't, unfortunately, and I love that you said domestic manufacturers because that's definitely the way to go. But I don't. But you know what? I'll take. I have a friend of mine who works. He's an engineer that works in manufacturing. I do know that they source their stuff from China, unfortunately. But I do remember also hearing at some point of a guide of manufacturers. I would assume it's going to be predominantly like in China or in Asia, but maybe if you kind of just Google like guide of manufacturers or something like that, you might be able to find something local. But let me take that question down, and I will send it to Daphne, and maybe she can get it to you.
I just wanted to remind participants that we are investing in our businesses through our business support link, which Daphne mentioned at the beginning of the presentation. On that link, there's actually a search where you can do by industry. So for this specific question, they're asking about domestic manufacturers. So you can go ahead and you can put in metal or plastic in that search. And what it's going to do, it's going to map out the entire area. It's going to actually break it down into subcategories. It might say metal, plastic companies, suppliers, manufacturers. It will actually break it down by subcategories. So again, you are reminded to check out our economic development website, where there is a business support resource tool and you can search by industry. Just wanted to add that in.
Yeah, that's awesome. And you guys are doing a lot, and that's what I mean when it's like, reach out to your city first. I mean, obviously you guys are here, so Fort Lauderdale is doing great work, but there's just so many resources out there for whoever needs it. I don't know how much I have more time. My kids are waiting for me, but that's okay. So if there's more questions, I don't mind answering more questions at all.
We're here. I noticed there are people dropping off, but there are still a couple more questions that we can get through. If you're okay, you let me know when you're ready to go.
Let's go for it.
Okay, so thank you. Great presentation. Okay, Elizabeth, would you have a suggestion for financial and health-based business startups? Financing is non-existent, or so it seems. Working like others to make a plan idea happen. So, for that particular industry.
Yeah, I mean, I would say, again, this is really broad. So it depends exactly what it is. Like, is it an app or a website or like a service business? It's hard to know for sure. But I think, financing for this, like you said, is going to be really difficult, especially if you're just trying to launch it. So your best bet is really, to go the private investor route, maybe the community-based or micro loan route might be good for you, but it depends on what the business is. The other thing is, and I'm not, I don't know if you do or don't have experience in this space. Maybe you do and you're already working in the industry, but if you're not, then maybe getting like a job in the industry or finding a partner that maybe collaboratively, you can take it to the next level. Sometimes we're afraid, like, the one person who asked a question about telling other people about your business. Sometimes that's, it's hard to do this stuff on your own. So, one way to potentially get there is by finding a partner that maybe has a related business, and you can kind of like just tag on to what they already have going on and build it as a separate business as part of that. I mean, that's just really quick without knowing more, just some initial thoughts.
Okay. Then are there lenders that would loan money to buy down high interest debt?
Yeah, actually, a lot of them. I mean, all of them do. But, it depends on all the factors that I talked about. I say all of them. I mean, like all of your traditional banks. All the online banks that I mentioned. They're all going to look at the debts that's on your books. And if your purpose for borrowing is to refinance older debt, that's not uncommon at all. It's very common. But again, it's going to depend on your specific business, right? They're not going to lend you the money if the business is not sound, if you haven't been around for a long time. But that's what you want to be looking for is a refinancing loan, just like you would refinance your mortgage. There are loans out there that are specific for you to refinance your business loans.
All right. Genesis, good evening. I would like to know, can I apply for a loan for a startup, including residential and commercial business? Her business has been registered since 2018, and she's recently opened up the business account. Thank you.
So I think, again, I think in this case, it's going to be hard to get a loan from a bank, right? Because banks are going to want 2 or 3 years of not only being registered, but like actually being in business and having financials to support it. This is another good one, maybe for a micro lender, or for the community-based organizations like Acción, or for some of the online lenders, you might be able to borrow. But I'll tell you that ultimately it's going to be more of a personal note. You don't, even though you have the SunBiz registration, you don't have a business until you have tax returns for your business, or at least tax returns that show income coming from the business versus another source of income for a bank, right? I'm not saying that you don't have a business. I'm saying that's the way the bank is going to see it. But there are programs out there where you might be able to get loans, but it's going to ultimately and most likely be a personal note. It's going to be a personal loan because your business doesn't have a track record. I'm sorry.
Okay. That's a good answer.
No, but I'm looking down the question and she said, I still don't know where to start. So I know it's really hard. I know it's hard. I mean, if you, again, you're most likely going to need a personal loan. You're not going to get a business loan. And you got to have good credit for that. So if you don't have good credit, then start with fixing your credit. If you do have good credit, then go on to Kabbage, go on to SoFi, go on to Prosper, go on to some of the other ones that I mentioned there, and try to apply for a loan. But it's going to be a personal loan. I mean, even your local bank and credit unions, you can get a personal loan, but you're going to have income. You're going to have to have good credit.
Okay.
You have good credit, so that's good. So I think any of those might be good options for you. They're going to ask you a lot of questions, and ultimately they're going to make a decision on whether it's really for the business or for a personal loan. So I would maybe go the personal loan route if you don't have financials to back up the business.
All right. I think the next question.
We're way over.
Yeah, no, we're good. We have another, let's say 30 minutes. 8 o'clock is our hard stop.
Okay.
Do you know if the relief funding for the COVID relief package is available for startup businesses as well?
It is. None of the programs that I'm aware of are for startup. They all have to have, it's all for existing businesses. You have to have shown income in 2019 or had income in 2019 or the first part of the year to qualify.
All right. I'm just typing out that answer.
Mm-hmm.
All right. How do you suggest building and recruiting a team? This is from Zachary. I have a fantastic business plan and model coupled with proof of concept, but I'm bereft of a team to help me when I receive capital from a lender.
So yeah, I mean, this is a little out of the scope of this session here, but I'll give you some ideas here. I mean, I think, and maybe you won't like my answer, but forget about the team for a second and think about what's that next single person that you need on your side to get you to that next level, and then just focus on that. So I'm a big, as you can tell, I've said it a couple of times, of the prioritization and focusing on what matters most. So, if you think you need an attorney, go find that attorney first. Focus on that. Forget about building a whole team. Find an attorney that believes in you. Maybe if you have a good business and you're generating capital, then you might be able to pay the attorney. But if not, then maybe you can find somebody that really believes in your business and will work with you on a pro bono basis while you build your business. You might have to give them some equity or something like that. That's the reality. A lot of times people don't want to give away their business, or their idea, but especially as a startup, if you want to build a team, the best way to do it is by saying, hey, I'm looking for someone like this. I can't really afford to pay you much, but I can give you, some equity in my business, and we work hard together. It's going to be worth a lot down the line. But that's kind of, I think, how I would approach it without knowing more about the specific business and exactly the roles and individuals that you're trying to recruit for.
Okay, we've got a lot of thank yous. All right.
You're welcome.
I believe the last question we have, and then if there are any additional questions, we ask that everybody just email us at economicdevelopment@fortlauderdale.gov, and Edgar will send us his contact information as well as the SCORE Broward mentor information if you need it. So we will be sending out a follow-up email to all the participants tonight with all the contact information for our presenter, for our office, and we'll send this recording will be posted up on our website. So for anybody who's already dropped off, they'll hear this message when they get the recording. So the last question from Lori is, a sole proprietor for many years forms an LLC. Will the credit be recognized for the LLC, bank loans, etc.?
Yeah, it's your personal credit will still, so as a sole proprietor, for those of you that don't know, that basically is, you have a business, you didn't create a legal entity for that business, right? So you're running the business and you do a Schedule C when you do your returns, your tax returns. So even if you create an LLC, or like my company is an S Corp, and still when we apply for credit, the credit of the owners is reviewed, at least one of the owners. So yes, your credit from you as the sole proprietor will still be recognized for the LLC, especially initially. If your LLC has been around for many years, there might be a point where they stop looking at your individual if you've already built some credit under the LLC. But even with an LLC, like we're an S Corp, so we're a separate legal entity, but they still look at a credit for one of our owners, at least one of our owners, even for a credit card application. So it's hard to run away from that until you're very, very big.
And I believe that is it for the night. So again, awesome. I just want to say thank you to everybody who has participated. Thank you to Crystal for staying on, to Edgar for being a great participant, presenter, and for staying on a bit extra to answer everybody's questions. So again, we'll be sending a follow-up email within 24 to 48 hours. The recording will be posted up on our website, and y'all will be notified when it is available. So you can always go back and review this information. So again, thank you and have a great evening. Bye.
Bye, everyone.
I just wanted to quickly mention that I looked at a lot of the names, and a lot of the names are people who participated last year. So we want to tell you thank you so much for your continued support. The more you guys participate, the more we are showing our city and our county the need for this program. So it keeps programs like this continuing to come your way. And I see that you guys are inviting friends and bringing them along. Always encourage them to join from the first class so that way they can get the graduate certificate. So those who are on here still know that anticipate to get follow-up emails from ECI regarding future classes that we're going to have. And it's important to get in early so that way you are hanging on with us for all 4 classes so you can get that graduation certificate. So I just wanted to add that in and to tell everyone thank you for your support, and thank you, Edgar, for enlightening all the participants through this program.
Awesome. All right. Have a great night.
Good night, everyone. Take care. Bye-bye.